Good evening. In this video, I'm going to show you how to determine credit sale when they are not given in a question. During your revision of financial accounting past paper or financial accounting past examination, you have seen questions whereby you are told to come up with a profit and loss account, but you are not given credit sales. So, how do you go about determining the credit sales? So, that is what we are going to discuss in this video. And from your lesson on recording transactions, you know very well that when goods are sold on credit, the journal entry is the first cycle of the accounting. You usually start with the journal entries, then we go to recording the transaction in an account or a ledger account, in an account called a ledger account. So when goods are sold on credit, how do you record that transaction in the books of original entry? You debit the trade receivable account, trade receivables. So you debit the trade receivable account and then you credit the sales. You credit the sales account with whatever the amount of money the good are sold at. Then, what if the customers are dissatisfied with some goods or some goods do not meet their quality? They decide to return some good. How do you record that transaction? If the customer returns some good, then you are going to debit the return. You are going to debit the returns inward account, or what we call the sales return account. You debit it and then you credit the trade trade receivables. You credit the trade receivables account. What if you had given your customer some discount, which is called the discount allowed? When you are selling the good, you had given customers discount. How do you record that transaction? So, uh, discount allowed, you debit the discount allowed account, and then you credit the trade receivables, the trade receivables account. We continue. So at this moment, if the customers pay the good that you, after some time, maybe after a month, the customers now pay for the goods. How do you record that transaction? So you debit the cash account because cash is coming in, or the bank account if they have paid through a check. So cash stroke bank, or let us just say cash. You debit the cash book, and then you credit the trade receivables account to reduce the trade receivables account. So you are debiting the cash account because the cash is coming in, and crediting the trade receivables account because they are now reducing. What if some customers at the end of the period, you find that some customers are not able to pay you back? That becomes a bad debt. And then if you have a bad debt, it means that you are going to write it off. So you will debit the bad debt account. You debit the bad debt account, and then you credit the trade the trade receivables account. So those are the journal entries that goes into the trade receivables account, and it is very important to understand this journal entry because they will help you a lot in determining credit sales when you are not given credit sale in a question. At this moment, let us now go to the trade receivable account so that and do an example to cement your understanding of this. The trade receivable account is here. So we are going to do a working on a question that was tested on August 2023 of Faisal Rajab. Faisal Rajab learns a business as a sole trader under the name Ferrari Traders. We are not going to go through the whole question, but we are just going to work out the credit sale. So in this account, I can see that the trade receivables, this is at that 1st March 2022, and we have that 1st March 2023. So the year is starting at that 1st March 2022, and it is ending at that 1st March 20. It is ending at that 1st March 2023. So if you go to the trade receivable, you can see that the trade receivables at that 1st March 2022, this is the balance brought down is 2,635,200. So we will come to the trade receivable account and say that the balance brought down of the trade receivable is 2,635,200. Then from there, we go to the we find out whether there were any returns inward or sales return so that we can credit the trade receivable account. Were there sales return or returns inward? In the additional information number 2, we can see that the returns inward are returns outward from credit transaction where 100,000 and 80,000 respectively. So we are only concerned with the returns inward, which is 100,000. So I'll come here and write returns inward, which is 100,000. Then we go to the next part, discount allowed. Was there any discount allowed? So we first find out from our question whether there was any discount allowed. And I can see from the additional information number 3, the discount allowed amounted to 75,000 shillings. So I'll just come here and write discount allowed. The discount allowed amounted to 75,000. So it amounted to 75,000. Let us push this to that corner. Then what about the cash which was received from the debtors? The cash which was received from the debtors. So we come here and write cash. Then we come to our question and find out the amount of cash. So received from the trade receivables, or they are also called the debtors, amounted to 5,720,700. So I come here and write 5,720,700. Then we continue. Was there any bad debt? Was there any bad debt during the year? So we come to the question again and find out whether there was any bad debt during the year. And from additional information number 6, trade receivables of shillings 42,000 had been written off during the accounting period. So it means this was the bad debt during the accounting period. Shillings 43,400 of the trade receivable as at that 1st March 2023, this is at the end of the year, may be uncorrectable and an allowance for this is required. Is this a bad debt? No, this is not a bad debt. The 43,400 is a doubtful debt. There's a difference between a bad debt and a doubtful debt. A bad debt uh, is the amount of trade receivable which cannot be corrected. But a doubtful debt is the amount of the trade receivable which the organization, due to some factors, the organization is not sure that they are going to correct that amount. So there's a difference. So here we take the trade receivable which is uncorrectable or which were written off because they had become a bad debt. So we come here, write bad debt. Bad debt, which is 42,000. And then, is there anything else in there in our journal entries? No. So at the end of the year, there's the amount of the trade receivable which is not yet corrected, and it is usually called the balance carried down. So we write the balance carried down there. This is the amount of trade receivables which is not yet corrected at the end of the accounting period. So we come to the question and we check, and I can see that in number 5, trade payable balance at that 1st March 2023 amounted to 850,000, while trade receivables at the same date amounted to shillings 1,100,000 and excluding interest on overdue account. All purchases were on credit. So I come here and say the balance carried down is 1,100,000. So 1,100,000. If we add all these, how much are we going to get as our balance here? So if we add all of these, 100,000 plus 75,000 plus 5,720, 700 plus 42,000 plus 100,000. I'm getting 7,073,700. And since any account must be balanced, so we expect that the balance here will also be 7,073,700. So let us put this one in bold and we underline it to signify that it is the balance. So the balancing figure here, because the balancing figure on this side, on the debit side of the trade receivable, because remember, uh, when we were starting this lesson, we said that when goods are sold on credit, you credit the sales account and debit the trade receivable account. So sales is the balancing figure on this side. So let us say sales balancing is the balancing figure on the debit side of the trade receivable account, which amounts to, so it is 7,073,700 minus 2,635,200, which amount to 4 million, which amount to 4,402,500. So that is how you determine credit sales when they are not given in the question. Thank you very much. And if you want to see the answer for the whole question, then you can watch this video on the top right